Good morning everyone and welcome to the Moneycontrol live stream. You're watching markets with Santo and CJ. Well, after 3 days of one-way rise in the market, it looks like we are in for a little bit of a breather for the bulls out there. If you look at the XGX Nifty 50, it's indicating a moderately negative start for the market overall. So clearly we are going to see some pushback from the bears today in the market. This is happening on the back of a pretty tepid day on Wall Street. We saw the US benchmark indices largely end lower in the wake of a very strong consumer durables data for the month of May, which has again brought back fears that Fed would probably retain its aggressive rate hike stance, given that the economy, it seems, is doing quite well. Apart from that, if you look at crude oil prices, they also surged on the back of that good economic data, with Brent now trading firmly above the $115 per barrel mark. So clearly, at this point of time, Santo, again, we are flip-flopping between situations and we don't know ahead of the expiry in just 2 days.
Yes, the sentiment appears to have improved a bit, and now there also seems to be a growing consensus that probably central banks may not hike as aggressively as they were threatening to do till some time back. But that said, things are still looking a little iffy. Probably the dark clouds may have receded a bit, but there is nothing really cheerful to look forward to. Earnings outlook remains quite subdued at this point in time, and even though commodity prices have cooled off considerably from the peaks that you saw in March, still the general feeling is that probably they could stay around these levels for a while, which will still then be high. On the positive note, the good part is that foreign institutional selling has abated somewhat, or at least it's not as intense.
But so has the buying as well. It does seem like the DII buying is also just close to where the sell figure is for FI.
So the market kind of is in a no man's land at this point of time, with neither the bulls nor the bears wanting to force the initiative.
That is the perfect way to explain it. I think we are just in a state of flux at this point of time. You could also, I mean, if you could take out the intraday volatility and if you take a 30,000 feet view of the market, you would probably realize that the market has not really moved. I mean, it seems like it's in suspended animation over the past, 3 to 5 months now.
That is what market does for long periods of time, but what happens is the last couple of years has really spoiled everybody's habit. You got used to the market moving sharply one way or the other, but this is what happens in the market for most part.
Well,
it does like pretty much nothing.
Yeah, just like life, markets are also a great leveler.
Oh, we are getting very philosophical in the early in the morning.
Follow with tepid period. So that said, let's quickly move on to some of the stock action that we have for you on the show today, starting off with Santo.
Bajaj Auto. Well, CJ, very interesting, the whole outlook on the two-wheeler space has been quite negative for as long as we can recall. Last many months we have been seeing the same thing. Companies have been complaining that things are not going well, but yet there seems to be a disconnect, between how the share prices have been performing and the outlook for the sector. So, if you look at even Bajaj Auto, for instance, so far this year the stock is already up 20%, beating even many of the star performers like IT.
Coal India, RIL probably are lagging behind.
And this
Auto.
When everyone has been negative on the two-wheeler sector, saying that things are looking bleak, there's a semiconductor shortage. Demand in rural areas has been quite weak, and still you're seeing a strong performance. Now this buyback announcement which the company made yesterday, I think, CJ, that is going to provide a temporary floor for the stock in the short term. You may not see the stock run away anywhere, but definitely this is going to be one steady performer. And according to Goldman Sachs, the buyback offer is also likely to improve the return on capital employed for Bajaj Auto by close to about 80 bips for FY24. Most analysts are still neutral on the stock, but if you look at the price target, it's in excess of most of the price targets are in excess of 4,000. So I think this is one stock which will continue to hold ground at these levels, more so because from here on situation is only likely to get better. You're already seeing commodity prices come off, which is a big positive for the auto companies. They've been hurting from that. Semiconductor shortage, well, that situation also is likely to improve slowly. You have the festive season coming up. So I think things are looking pretty much good for Bajaj Auto at this point in time.
Santo, I think probably the buyback at this point of time just provides a decent flow to the stock, given that the stock has probably not been performing that well for the past 3-4 years now. It's been since the IL&FS crisis, we have not really seen the automobile space do quite well. The only thing, that, catches me about Bajaj Auto is that, of course, the upside is likely to be limited. Even if you take the buyback into account, it is not very likely that you will see probably Bajaj Auto heading towards 5,000 or 5,500 anytime soon. Apart from that, if you look at what UBS had to say, they are one of the brokerages actually who have retained their neutral call on the stock, given the certain challenges that Bajaj Auto has been facing on the demand side. Now, Bajaj Autos, what made it outperform, say, somebody like Hero MotoCorp. We know that Hero MotoCorp probably was worse off than Bajaj Auto over the past 3-4 years. It has seen much more losses. But what helped Bajaj Auto hold some of its ground was the fact that its export business was doing so well. So while India demand was not that great because of COVID and other factors like economic slowdown, the export business was doing quite well. But I think the May data turned investors and markets head on that counter, because the May data saw a very sharp decline in exports for Bajaj Auto. And I think going ahead, that is one concern that remains. Even Morgan Stanley pointed it out, that they believe that if the high margin export business starts to slow down going ahead because of larger global macroeconomic factors, that could become a concern on the margin front, even as you could get even if it could get a little bit offset by some of the softening of the commodity prices that we have been talking about. So clearly, the jury remains still out on Bajaj Auto. I think the buyback clearly indicates that the management feels, or the company feels, that at this point of time the stock needs its support, or else the market sentiment towards the counter just does not seem to reflect where the management feels is the fair value of the company. But I feel this is also an indication of probably the fact that at this point of time they just have too much cash on their book, and they don't have that many avenues to probably go out and invest. Some would argue, well, you could go out and go whole hog on the EV space, as some of your rivals like TVS is doing. But it just seems like Bajaj and Hero are a bit cautious on the EV space compared to somebody like TVS and some of the other startups out there. So yeah, in totality, just not the stock for me at this point of time. I just don't think the Bajaj Auto offers enough for me to be excited about the counter.
I take the point about the export growth concerns, but if you just look at purely from the price point of view, the way the stock price has been holding, maybe is indicating that the market has kind of discounted those concerns already.
Well, one stock where market could be very excited today is Sterling Tools. Now, yesterday they came out with an announcement suggesting that their arm, the EV electric mobility arm, basically is going to foray into electric LCV segment, which is your commercial vehicle segment. Now, this basically what it does is it expands the product dynamics or the product mix that the subsidiary has for electric vehicle market. We know that two-wheelers are doing quite well, and that is where the subsidiary actually made its foray in first. Apart from that, we know the passenger car side is picking up, and now there is also a lot of pickup in activity in the LCV segment of the commercial vehicle segment. So clearly, Sterling Tools subsidiary is trying to expand its gamut of products that it has to offer. Now, at this point of time, if you look at the company already within a year or 2 years of existence, it already has amassed 10 confirmed clients for its business. So clearly, the marketing side of the business is doing well. They are getting more orders in, and that should boast well for the upcoming years ahead. Apart from that, generally, I mean, the EV space is the space to be. If you're in a automobile sector, that is the place where there is high growth. Yes, there are challenges too, there are concerns too, but at this point of time, I don't think companies want to let go of that growth opportunity. And clearly, Sterling Tools, being an auto ancillary, is trying to capitalize on that side of the sector. And I think that it's in itself should be able to convince a lot of investors that this is one stock that they need to keep on their radar going ahead.
Well, all points taken, CJ, but I'm a little surprised at the way in which the stock has taken off over the last 1 month.
Why? Look at the areas that they're getting into.
Yeah, they're getting, and the market suddenly seems to have woken up to the story. It was around 120 odd, and now it's what, almost more than doubled in price in just about 1 month. And that kind of steep rise kind of always has me a little worried, especially when you look at the company's track record.
I think you have an issue with vertigo, probably. I think that is why. You have a fear of heights, I think, my friend.
No, I'm saying that the price appreciation has been rather too sharp here, and you look at the longer term performance track record of the company. Last 5 years, the earnings, the top line growth has been very tepid, barely about 5%. Same goes for the case of the bottom line growth as well. So it's not a company that's been performing for a while. All of a sudden, market has got excited. The company has made the right kind of noises. So I'm not saying that it's not committed to what it's announced, but what I'm saying is that I would, given all these factors, I would rather wait for some more time, maybe a couple of quarters before taking a considered view and see if things are actually reflecting in the operating numbers.
Yeah, absolutely. I mean, so far, yes, the earnings have of course not followed the sort of stock price performance that we have seen, or the sort of the entries that the company is making into newer businesses. But clearly, I think that is just a matter of time. It's not a question of if, it's a question of when that reflects in the numbers of the company, in the P&L statement of the company. I just feel that, as usual, I think market is just doing what it always does best and is discounting the future. And because, as you mentioned, market probably just realized later that there was a company out there which is also trying to get into this sort of space and probably has a good background or a history to back it up. Probably, I think that is why you're seeing just that sudden rise in the stock. Maybe it will cool off for a little while from here, but I think as the earnings also start reflecting, you will see another rally or another leg up in the stock going ahead.
Well, Voltas is the third stock on our watch list today. Now, the reason for the stock being in the news today is CLSA's decision to downgrade its rating, its price target on the stock from about 1,000 to 9.
It's about 2 months too late.
Yes, in fact, Voltas has been struggling ever since its disappointing fourth quarter number. Huge loss of market share there, and now since then you've seen the stock consistently underperform. Now, CLSA is of the view that the kind of margin hit that Voltas has taken, it will be very difficult for it to get back to the previous levels anytime soon, given the high competitive intensity out there in the market and also the rising input prices. And you can already see that in the stock price. The stock has been pretty much in a narrow band. It had been in a narrow band even before that, but after the fourth quarter numbers, it was becoming very evident that the company's operating performance is struggling. So you could see that downtrend in the stock maybe continue for some more time. You will not see a very sharp downside here, probably. That's the way, that's been the nature of the stock. There's it's not a high beta stock in that sense, but it's not going to go anywhere either.
Well, Santo, I think Voltas has already taken a lot of battering, so I don't know how much of that the stock probably deserves to take at this point of time. You talk about, of course, the major concern last quarter, the March quarter earnings, was the fact that the company lost significant amount of market share, and that took everybody by surprise, given that Voltas is a market leader. But clearly, we had talked about this earlier in the show as well, last month as well, that now there is indication that in April and May, the company was able to regain some of that market share back. So clearly, it is headed in the right direction. I would expect that the June quarter earnings will show that there would be a significant recovery as far as the market share is concerned. Now, apart from that, we have had, although monsoon has made landfall for close to a month now, yesterday. But yet, I think it's been quite patchy, and there have been heat-like or warm conditions probably throughout of north of India. So I think that probably extended the period of sales for a company, AC maker like Voltas, and I think that could probably add a little bit more to the June quarter earnings for the company. Lastly, of course, margins had been, high input prices have been one concern for consumer durable companies. But with the latest softening in commodity prices, I would expect that coming quarters, maybe September and December quarter onwards, you will start seeing that also reflect in on the profitability front, and probably you could see some improvement or some sort of recovery happening on the margin front as well. And lastly, consumer durables is a long-term story in India. I mean, come on, with a country that has a per capita of about $2,000 and expected to probably double it in another 10 to 20 years, I would expect that AC market penetration would continue to rise, and therefore it will be a little short-sighted to let go of a market leader like Voltas and not bet on it to succeed. The one stock that I would be probably looking out for very keenly in this market is also a realty player called Brigade Enterprises. The company has announced that they are going to get into a new project in Chennai, which really boosts the outlook for their sales going ahead. They had indicated that they have a big project pipeline in their March quarter earnings call. So clearly, the management is making moves on that front. Now, this project is expected to, bring in about 1,500 crores for the company over the next 5 years. So clearly, a good point in terms of revenue visibility. And apart from that, analysts expect that the sales momentum will continue going ahead, given that the company has a very strong project pipeline ahead.
Well, a quick take a look at the market.
Yeah, it's a red all over, it seems.
800 stocks on the NSE down compared to 864. Sorry, it's 800 stocks up compared to close to 900 stocks which are down at this point in time. Sensex is down about 246 points. The market opening pretty much on expected lines.
Yes, and I think even for the mid and small cap space, we are seeing almost similar cuts. The Nifty Mid Cap 100 index is down about 0.6% at this point of time, while the Nifty Small Cap 100 is down about 0.5%. The India VIX is surprisingly higher. In fact, even in yesterday's session, Santo, the volatility index of the fear gauge actually ended higher despite the sort of gains that we saw in the market. So clearly, shorts are starting to build up again. I think bears are trying to make a comeback in this market, given that we have seen almost 700 to 800 points one-sided up move or a pullback in the market. So it will be very interesting to see, given that we are approaching expiry, and generally ahead of expiry, you tend to see a lot of shorts positions being covered or squared off. So whether this this sort of a drawdown will sustain or not going ahead, it'll be interesting to see, or whether we'll see some sort of comeback from the bulls later in the session.
Well, coming to your point on Brigade Enterprises, again, compared to other real estate companies, the longer term growth in its top line and bottom line has been pretty much muted. But of course, the share price movement is another matter altogether. It's been among the best performers, so there seems to be some kind of a disconnect. Maybe the market is seeing something which you and I are unable to see. That said, it looks like the high interest cost is clearly weighing on the company's profitability. That is, it needs to do something about its borrowing costs, and that makes me feel that probably the company may go in for an equity issue at some point in time. That's the only way it can bring those high debt levels down. So that being the case, maybe you could see some equity dilution going forward, which could be a short-term negative for the stock, CJ.
Well, Santo, I think probably even if the equity dilution does happen, I probably hope that it will be more of a QIP sort of an issue. And I think if that brings in more quality investors into the stock, that I don't think the market will look at it as a negative in the longer run. That should probably be good, because also they'll be able to get the debt down. But apart from that, I think the debt also will probably come down as the profitability increases, as the cash flow generation also increases for the company.
There are no signs of that so far.
Yeah, no, so far it has not been, because let's not forget that it's only been 1.5 years that we have come out of a big recession cycle in the real estate market. So clearly you need to give companies a little bit of time. Unlike steel companies who could see a one-way rise in prices, real estate companies so far have not seen that. It has been a very gradual
even players like DLF, Lodha have all managed to, reduce the debt.
DLF has been able to do it only on the basis of selling out some of its asset and also raising equities. So clearly, you cannot compare a giant like DLF to a smaller mid-cap player like Brigade Enterprises. So clearly, at this point of time, Brigade is trying to take the slow and steady route instead of, going out and just doing it in one go. The last stock on my list is PI Industries, another chemical name. Now the company, recently met with analysts, and analysts seemed quite impressed by the guidance and also the commentary that has come in. Despite the macro headwinds that we have been talking about for the past 3-4 months, the company has retained its guidance for 18 to 20% growth in top line in the export as well as the domestic business. So that is quite good for FY23. Apart from that, the one side of the business that has really done well in the past and will continue to do well in the future is the contract manufacturing business, or the product development business that PI industry has for a lot of innovator companies globally. Now this side of the business is expected to do well. Why? Because they have an order book of nearly $1.4 billion on this front. So clearly there is a lot of headroom for growth going ahead. Apart from that, if we do see a revival in the monsoon, so far monsoon has largely been in deficit across the country, but if we do see the revival of monsoon in the second half, probably June, July and August, we could see the domestic sales also start doing quite well on the agrochemical side for PI Industries. And lastly, this is much like other chemical names out there, Santo, this is one stock that has seen a correction this year. That is down about 13 to 14%. for the year. So I feel that valuation also, I don't think investors could have any complaint on the valuation front as well. Clearly, valuations have moderated in line with a lot of chemical stocks out there. There are no concerns that there is froth now in the valuation. I think investors can be rest easy about that, and probably it could start turning a little attractive from a risk reward point of view.
Well, among all in the chemical space particularly, I think the demand for agrochemicals, among investors, that's been pretty much steady, and I think that you're seeing some bit of it in the case of PI also. So I'll grant you that one, CJ.
Thank you so much. I'm humbled.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedback in the comment section below.
And do follow us as usual on the social media links that you can see at the bottom of your screen. And for rest of your financial news, guys, stay tuned to moneycontrol.com, and please download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.